Yeah, good morning, guys. Good morning. All right, let's get started on the pre-market routine for this morning, guys. Let's go ahead and get started on this morning's pre-market routine. As you see today, we do have a couple news announcements coming out here. Nothing too crazy that's going to really push the market around anywhere, but we do have some medium type news as far as forex is concerned, as far as the medium tag that it puts on it. Capital utilization and industrial production. Both of them could have a little bit of a push on the market. The thing about both of them, they come pre-market, so they're going to come 15 minutes before the market opens, about 5 minutes from now, and it could get a little bit of a jive or a little bit of a kickstart to our Monday morning. So we will definitely not be in the market at this time. We're actually going to be doing this pre-market routine throughout this trade or throughout this time frame. So we really won't be impacted by it, but I am going to watch to see how the market reacts to the numbers, whether they be positive or negative, and the initial reaction to see what type of volatility we can get moving forward. So, something we will watch, but we're not going to watch too closely. So, let me drag over the anchor chart here a little bit, and we'll go through a couple of these markets, the ones that I see any significance on, and we will mark up some levels. There's obviously a couple every single morning we see that just are going into a consolidation zone or are starting to chop a little bit, and really not a lot for us to do at that point, guys. We need to just sit on our hands, step back a little bit, and just wait. So, as you know, last week was rollover for the indexes. We're now looking at December contracts. Guys. So make sure you get that right. Make sure you have your dome set up properly. You've moved on from September to the December contract. It rolled over last week. And just looking at a couple price levels here. As you notice, we're obviously gapped up significantly on the indexes, guys. Significant gap up here. This is the S&P. The Russell's going to be the same way, as well as the YM. All your indexes are going to gap up significantly today. So pay close attention to them levels. As you see here, I have some support marked up from the past. You see this is previous support from the past here, and this is previous resistance still holding up. If you pull up an hourly chart, you're going to get all this information. Pull up an hourly chart, you're going to get all this information. You can mark it up. Just go to an hourly chart, mark it up, and then you can hone in on a 15-minute chart to find your areas exactly that you want to trade. So that's what we're looking at here as far as support and resistance. Anything break below this previous support. You see it has been acted on once this morning. Around midnight, it was acted on this morning and bounced up nicely. We're coming down into that zone again right now. I'm not going to get too excited about the downside until we can break the 21 EMA. Break the 21, we can trade back down towards this previous high. That may give us a little opportunity to the downside. There's going to be a little bit of a wedge here, or a little bit of a gap here for us to go ahead and trade back to the downside. I'm not going to get too excited about it, but if it does happen to break that 21 EMA and we start to get some stair steps to the downside, I'm more than happy to take them to the downside. This applies to the Russell and the ES. I'm more than happy to take stair steps to the downside if we can break this 21 EMA. Let's zoom in on a 15-minute to get a little better idea of what we're looking at here. Zoom in just a little bit on the 21 EMA. You see how much of a gap we have here from these previous highs from this break. So we do have a little gap here that we can get active with trading the stair step to the downside. Now, once we get down into this range, it's kind of a free-for-all. So I don't know if we're going to attract some buyers in here or if we're going to continue to sell off. You could attract some buyers in here. You got a nice 21 or 200 EMA coming up on the 15-minute chart. Just too much choppiness in here for me to be interested. So only thing I'm really interested in are stair steps below the break of support down to new support, which I should mark up right now, right down to new support. And other than that, I want to be a little bit cautious. I want to let this go ahead and play out over the course of today, tonight, and maybe into tomorrow to see if this little push wants to fill this gap or if we're just going to break and continue higher. Either way, I don't care. If we do break highs, there's really nothing except for stair steps to the upside that I'd be interested in. There's a free for all. There's a big gap on up. There's really no resistance at all. So just continue to push on up. But if we do break to the downside, we got to get a little bit more cautious on the indexes here. Let me move forward to show you the Russell. Same thing applies to the Russell, guys. Any break below these lows, I'm going to continue to stair step this down to the support that you see here, the same support that's on the S&P. Nothing really crazy. Obviously, Friday's trading range is way down here. If we were able to get down there today, more power to it. That'll give us opportunity leading into tomorrow. But I don't see a lot of trading being done by me in this zone. Don't see me trading this zone a lot. I definitely can see myself trading any type of break below these lows. But as far as trading down below here, I don't see it happening. I hope that actually happens like lunchtime today and leads into tomorrow, so it can decipher whenever I'm not going to be trading it, ideally. So any break below these lows on the indexes, I'm going to try to stair step this down, taking small opportunities to the downside. And once we get down into this zone, I really want nothing to do with it, and nothing to do with this zone here either that we're currently trading sideways in until we break the highs. So indexes are going to be a little bit rough, but like I said, we have a rollover. This is the start of a new contract. People are getting in here, starting to kind of figure out what they want to do here. We're into the fall, guys. We are into the fall. Volume is going to come back into the markets. So a lot of good things happening as far as day trading goes moving forward. Dollar, you can see. Let me hone in here on the dollar and the euro. Obviously, we use these as a correlation, guys. Euros had that same gap that the indexes have. No denying that. But I want to pay attention to the gap. As we gapped on both of them, I want to watch this dollar really closely because the euro's been very active, and that's because the dollar and the euro are trending together. Obviously, the dollar pushing down, the euro pushing up, they're completely inversely correlated. But I want to pay attention to the dollar. Dollar breaking lows right now as the euro is at highs. So if the dollar can continue to push down, we're going to start creating new highs here on the euro for stair steps to the upside. Looking to stair step our way back to the upside as the dollar stair steps its way to the downside. That's ideal. Now, if the dollar has a little head fake here and you see the dollar come back up inside of this range, let's do the same thing with the euro, providing a really good opportunity. The euro to roll over and then start stair stepping its way down towards Friday's trading session. First target, Friday's high, which is right here at this previous trend line. So really good opportunity I see as long as the gold and the euro and the dollar continue to move. They are moving very well here in the past. So hopefully we can get some continuation of that. We've had a lot of euro trades here in the last couple weeks. So hopefully them can continue. But it's all derived on this dollar. If the dollar's not moving, typically the market's not moving. So as of right now, we've got some really good moving in the dollar. So let's pay close attention to that. See if this dollar is going to continue to push on down as you see it breaking out right now. Let me blow it up for you. As you see the dollar breaking to the downside right now, this could provide a really good opportunity. Either way, this is one of the things that either way, this is going to provide a good opportunity. Even if this comes down and starts stepping down, that's wonderful. But even if it's just kind of a fake to the downside, a fake out to the downside, and then it comes back up, as long as it comes up and then it breaks, it holds this low as support, this is going to provide a really good opportunity in the euro to the downside. It's going to provide a real good opportunity for the euro to start trading down towards Friday's high of day. So good things happening as far as the euro and the dollar correlation goes. And the last one I'm going to show you is going to be the crude here. Let's look at the crude. As you see, crude is gotten all marked up here. Crude, we got a nice little wedge forming on the longer time frame. If we zoomed out to an hourly, that's where all this came from. You see a nice wedge here forming on a longer trend. You see here recently, Thursday and Friday last week, we actually pinched in even more. We created even a tighter wedge. So let's use these wedges in correlation with the moving averages and the price levels that we have marked up here to find some trading areas. As you see right now, we're kind of respecting that Tuesday's low. We're kind of respecting that Tuesday's low at the moment. So as you come down here, we're head faking it just a little bit and trading back to the upside. The most important levels I'm going to look for, guys, always are the previous trading day's levels. As you see here, Friday has previous highs and previous lows. Previous highs, previous lows. Those are the significant ones. If we can hold Tuesday's lows here, as you see, we've had a little bit of a head fake. You see, it's created an accumulation bar. This is a 15-minute time frame. So a 15-minute accumulation bar is very significant. What I mean by accumulation bar is we opened up, say here, we traded way down, and then we traded way back up, and we closed at what most of you are going to know as a hammer. This is an accumulation area where the sellers came in, drove this market down, found a price that they wanted down here, and then nope, buyer said, the hell with you, I'm pushing it right back to the upside, and then it closed above our support. So that's what crude does a lot, guys. Crude has that tendency to do that fake out, breakout market. So even whenever we come into a support area, we don't immediately always look to sell. A lot of times we'll wait and say, hey, is this thing going to break up? And then a lot of times you'll see it break up, come right back down, and then there's our opportunity. Watch out for crude as a fake out, breakout market. And this is what I like to see at these lows. Let's create this accumulation bar so we can start pushing back to the upside. As you see right here, we have accumulation. Just to show you in the past, we had accumulation bar there. And as you see, that got broken. But what did it get broken by? Another accumulation bar. And then whoop, right back to the upside it went. As you see here, as soon as it happens, pullback. That's the same pullback I just showed you on this example I drew up here. We faked out and then right back to the downside. There's your trade. There's your trade. So same type of move, same type of reaction, guys. Watch for the fake out breakout. After we see this start to chop our way to the upside, watch out for the 21 and the 50. Other than that, I see resistance at Friday's low of day. So let's watch out for that. Let's try to trade it. We get back up there, look to sell it. If we can get back inside it, we're trading higher, and there's only one solution. If we get up inside of previous day's low, we're going back up towards previous day's high. That would be a significant move today, so I don't know that we're going to get that much of a move, but we could definitely get some move back up towards previous low of day as we watch out for the moving averages, the major 21 and 50 moving averages here. But trading a smaller time frame, we could chop our way, step our way back up to first step, previous day's low, second step, previous day's high. So some really good stuff actually looking at here on the crude. So we got a pretty good opportunity. Anybody have any questions about any of the setups, any of the approaches to the pre-market today? As you see here, here's also crude on a 5-minute and then 233 tick. You can see this head fake that we're talking about here. See this little fake out that we're talking about here, guys? Sure enough, we got this little fake to the downside, push up, pull back, and now we're scooting right back to the upside, just as expected, guys. So, yes, that's, yeah, Joe. Yep, absolutely, man. So, anybody have any questions about today's, what we're looking for today, and, you know, what's the approach moving forward? I'm going to start to do some screen capturing, capture some of these charts so I can get them up on the blog for you guys to look at throughout the day. if we have some movements in a certain market, obviously I'm going to be watching with you, and this way, if I have them up on the blog here, I'm going to make some posts, and you can refer back to them. So, any questions about this? I'm going to sit on my hands. I'm going to go get a drink here before the market opens. We got about 5 minutes before this market opens up here, and we will wait a little bit. It's Monday morning, guys. People are slow to get back to the office, just like we are. So let's not get too anxious and take advantage of it. So, all right, guys, let me go grab a drink, and I'll be right back.